But the space which is firing right now is, of course, the public sector banking names. Pull up a Punjab Sindh Bank, a Central Bank, a Bank of Maharashtra. These are the stocks which are spiking, and that's the reason your PSU index is at the highest point of the trading session. Nooresh, your word as far as the PSU banking index is concerned and your top bets?
So the Nifty PSU banking index has given a breakout in the short term. The top bets which have broken out is Bank of Baroda out of all the names. Can Bank has already moved. And the previous favorite, which continues to be PNB, which has been a relative underperformer in the current whole rally of the last 2 years. So like Bank of Baroda, the stock has given a flag breakout today, could head up towards 220, 230 levels. PNB has a lot to catch up. The stock is still lower than where it was back almost in pre-COVID times. The stock used to be 65. The stock has only managed to reach that point today. That could be a stock which could surprise on the upside, go towards 85, 90 mark. So these are the two names in the PSU banks. And SBI is the last one which I would be watching out, but there's multiple resistances around that 600, 620 mark, which was the recent high. So for now, it would be Bank of Baroda and PNB.
Okay, those are some stock calls coming in from our experts. In the meantime, let's just take stock of some of the other buzzers. Can Bank, Glenmark, HDFC AMC, Idea, we're just seeing a very, very, solid spurt there. And then Adani Ports holding out very smartly. Kunal, we were just talking about the spurt in Adani Ports as well as Enterprises. Trade-worthy?
Yeah, I think Adani Ports and Enterprise both are looking attractive. Adani Ports today has specifically given a very classic breakout. And this comes after, I think, almost a period of 9 or 10 months, to be precise. I think it's around 2022 December when the stock had broken past about this 850, 860 levels. And from there, this is the first time that the stock is crossing about those points. So this is a huge comeback for Adani Ports, confirming a breakout. And, the way the volumes are shaping up today, it could be one of the better days of volumes for Adani Ports over that much of time period. So it looks very attractive. Adani Enterprise also could be interesting because the stock has this odd tendency of going into high beta mode whenever the entire Adani group of stocks get into a huge breakout. Stock has broken past about that 2600 barrier, which was also the previous resistance for Adani Enterprise almost a couple of weeks back when the stock had taken a retracement and fallen some 150 to 180 points from those levels. So that also looks very attractive.
Okay, so a lot of attractive, pockets in the market right now. Devang Mehta also joins us on the show from Spark Private Wealth as well. Devang, hi, thanks so much for making time. And we are speaking at an interesting time when we're just 30 points away from the high point on the Nifty, that is the life high. But do you think it's time now that the banking names will lead the rally? At least that's the trend that we have seen in the past week. It's HDFC Bank, Axis Bank. Today, PSU banks are definitely quite active. Do you see the return of the banking names? And if yes, which stocks will lead the rally?
Thanks for having me on ET Now. Good afternoon. Yeah, it's great to always be on ET Now. Yeah, so I think there are a plethora of factors which I was just looking at when you talk about the banking index or you talk about the banking stocks. On the fundamental front, if one can argue, in 2018, the entire banking system together collectively put, the NPAs were roughly around 11%, and now this is roughly around 4%. With extremely strong credit growth happening, extremely strong capex, government-induced capex as well as private sector-induced capex. I think this is one sector which has sort of underperformed the broader markets in the last, if I can say, last couple of months. It's very heartening to see, as you rightly talked about, lifetime high, but a plethora of factors is leading to this lifetime high, be it macro stability, be it micro stability, be it political stability. And I think sentiment, one can't argue much against the sentiment as well as liquidity. So my sense is, yes, banking sector probably adds a lot of multiplier effect to the economy and vice versa. The sense one gets here is, yes, you can't probably ignore the banking stocks when you're talking about economic expansion for the country led by capex, credit growth, consumption. The sense is that, yes, you need to have certain private banks as well as this is also a time where even a lot of your PSU banks are going to be credit substitutes or going to be helping the economy grow as such and giving a lot of loans to the corporates as well. So yes, this is one sector. A lot of private banks, a lot of PSU banks, certain NBFCs, consumer finance companies. I think all these companies could probably do well. Of course, give and take 5% correction here or there. But most of these banks should be good proxy play candidates to play the economic court.
A big spurt in all the railway names today. Would you be buying any of these names afresh or adding to your existing portfolio positions or recommend so post the rail and port deal?
I think the message was quite clear when we talk about G20 rail and port deal and stuff. I think most of this seem to be more symbolic right now. But as we go forward, yes, there is a theme which has come out earlier. I don't remember the PSU type of theme or railway. Earlier, if you remember, I think the railway stocks used to do well only before the railway budget, the 10-15 days or 1 month before the railway budget, and the rally used to die down. But this time, I think probably a lot of companies are seeing order growth. A lot of these companies are been executing this order flow, be it metro, be it mono, be it railway signal systems, the safety enhancement features, or the internetization, if I can use that word, of railway platforms. Most of this, I think, seem to be right now in the price. But yes, going forward, I think if capex is going to be the buzzword for government as well as private capex, defense spend for government, railway spend for government, I think this is on the rise. Selectively, yes, there will be buyers in some of these businesses, but not all these businesses for sure.
Okay, so that's a view coming in as far as the railway stocks are concerned, and that's the question a lot of people have in mind. For people who have missed out of the rally, do they start, kind of adding positions into those, or probably it's time to book profits? That remains the big question. But what else is happening in the market? Well, a lot of pockets actually doing all right. We have been talking about the power stocks, which have been on a bull run of their own. Of course, SJVN is one stock which is flying away in the trading session. JSW Energy, the news flow that we just talked about, and Tata Power, Adani Power are some of the other names from that pack that continue to gain as well. Kunal, your view as far as the power stocks is concerned, which is the stock which still has the biggest upside left?
Difficult to say the biggest upside left, but then I think upside is still left for JSW Energy. Even though after today's up move of 9%, R Power, etc., I don't track those stocks, so very difficult to recommend a buy over there. But JSW Energy is something more classic. The stock already went through a 10x move in 2020-22, and then from there the stock corrected by more than 40% or so from, I think, 375 odd levels, coming down to as much as 250 mark for JSW Energy at one point of time. And I think after that, time-wise, price-wise consolidation correction, the stock is now looking attractive for a breakout in the long-term chart. So if we go back to the 2020-22 rally for JSW Energy, then I believe that the stock should see at least another 30 to 40% upside, which means closer to 540, 550 could be a benchmark target for a stock like JSW Energy.
Okay, let's also address some of the buzzers which have actually taken a bit of a breather today. So Coal India definitely is one such case in point after a tearaway move last week. BHEL, and I think this must be the first day that the stock is down about 2.6%. And similar can be said about PVR Inox as well, 2% lower on this one too as we speak. Nooresh, opportunity like today to buy into BHEL, or do you think a large chunk of the rally is behind us?
So I would not be buying so early into the fall. Fall closer to 130, 35 is the price where you want to get in if you want to. And the fact is the stock has moved up from 80, 90s to 145 plus levels. So there could be a period of time where the stock could consolidate here at 130 to 150 going forward. So would not be in a hurry. The move has been pretty large. The trend on the longer term still remains extremely positive. So out here expecting some bit of a pause, but closer to 130 is where your risk reward gets into favor. Apart from that, it could be maybe after a few weeks of consolidation, maybe even at 140, 45 after a consolidation would be better.
18 hours, still counting down to that all-time high for the Nifty futures. Of course, we've scaled it to that 20,000 mark. It's a good solid 140-point uptick that you're seeing. It's Adani Ports, Adani Enterprises, HDFC Life, Apollo Hospitals, Hindalco. These are your big leaders amongst the large caps. And then, of course, there is a great amount of move on an idea, for instance. That's put up about 8%. Canbank is looking very strong with a 6.25% bump up. Glenmark is holding out 4.5%. And HDFC AMC as well, which is looking strong by 6% as we speak. Handful of losers too, and like we earlier flagged off, there's Bajaj Finance, ONGC, Coal India, BHEL, PVR Inox. Maybe those are some of the drags in trade, but just a handful of them to be precise. But let's take stock of, what else is looking strong other than, of course, banks. And Kunal, sectorally, for the market to push up higher from here, what's going to contribute outside of the private banking names?
Well, auto stocks is something which also I think is one of the key sectors which has a high correlation with respect to the Nifty. And many of the stocks like Maruti, Tata Motors, M&M, etc., many of these stocks do have a decent weightage on the index. IT, of course, is the other sector which also holds a lot of prominence. And the good part about the market this time around is compared to the previous attempt towards the 20K mark, you have lot many other large cap names which are firing. So, even if you do a relative comparison between the likes of, say, for example, the IT stocks in the month of July as compared to where they are right now, auto stocks like Maruti, where it was in the month of July as compared to where it is right now, there is a relative outperformance which is there into many of the underperforming names. And I think that's adding to the overall market breadth and the market sentiment. So it's not as if that the stronger stocks have gotten weakened. The stronger stocks are going through a time-wise correction, and the weaker stocks have bounced back in this phase of the time-wise correction for these large cap names. So I think that's adding to the overall market breadth. So all in all, looks attractive. And I think other than Bank Nifty and the private sector banking names, it could either be PSU banking stocks, auto as well as IT, which could play a decent hand on the upside.
Okay, just 20 points away from that earlier high of 19,991. So we are counting down to that. But just keeping the spotlight a bit more with the banking names and specifically with HDFC Bank. In fact, if we can, let's pull up the dual line chart of HDFC Bank as well as Nifty Bank over the last 5 days or maybe last 2 weeks if we can, and see that HDFC Bank has managed to outperform the index moves. At least that is what the initial data tells me. Today as well, that stock is high by around 0.7%. There are brokerage notes as well talking about how the cost is likely to come down for the bank going forward, because HDFC Limited will also get access to the lower cost deposits as well. The growth rate will likely pick up. And if you look at the technical side or even the adjustment factors, this week itself on account of that FTSE readjustment and the Sensex readjustment, there will be almost $600 million that will come in through, and this will continue over the next 6 months as well, because the readjustment will happen in 3 staggered manner. Devang, my question to you is specifically on HDFC Bank. Do you think this one could be now the top bet from the banking space given the stark underperformance in the last 1 to 2 years?
I think yes, we have been maintaining this, that this bank is going to sort of now sort of enjoy the economies of scale. The synergies of HDFC and HDFC Bank, which now becomes a sort of a behemoth or a conglomerate in terms of its banking strengths as well as housing finance strengths. Both of them, as they are integrated together, yes, of course, HDFC will benefit from lower cost of funds from HDFC Bank and get to use each other's synergies as well. Yes, this has sort of underperformed. The last couple of years belong to the likes of Axis as well as ICICI Bank, which sort of came out of the oblivion and suddenly had high ROAs, and did exceptionally well, all marks to it. But yes, probably at this point, if there is going to be a bit of re-rating that can happen, it can happen to this business, where also there will be flows which would come in. People had sort of wanted to merge these banks and then take a conclusive call on that. I think the overhang out of the story is now over. It's now again on the growth trajectory that one needs to just monitor.
I want to just quickly bring up IDFC first as well. After the GQG buy of 5 crore shares from the MD and CEO V. Vaidyanathan, which happened in today's block, that stock has been fairly resilient at 96.65 in trade. And V. Vaidyanathan spoke with us as well, telling us that the share sale proceeds are going to be used to subscribe to fresh shares. In fact, if we have that soundbite, let's just play that up and we will, get you more on that. But Devang, if I could just get your thoughts in on IDFC first. Quite a few bullish calls out there on the street. I mean, typically one would think that the promoter bringing down their stake spells bad news, but clearly not the case.
Don't track it too closely, Aisha. I wouldn't be able to comment specifically on IDFC First Bank.
It's about IDFC First Bank, but let's listen into specifically what the management had to tell us.
So sources tell us that JSW Neo Energy is looking to raise around $500 million from stake sale. It is in advanced talks with TPG, TEPCO and Brookfield.
Yeah, we'll come back because I think that was the reporter of JSW Energy. But nonetheless, let's take a look at what's happening in stocks as well, because it's just 15 points away from that life high level. It's Reliance, which is doing the heavy lifting. HDFC Bank is participating as well. And then you have Adani Ports, which is doing quite well for itself. That 7% gain coming in. And Axis Bank too is actually doing all right as well. A 2% gain on Axis Bank. Reliance, of course, is the heavyweight, which is going to, make a huge difference. But the banking stocks too are doing their bit. Even ICICI Bank, for that matter, has managed to perk up in the last few minutes. Nooresh, your thoughts on Reliance, and what are the chances that this 20-point, is something that we scale today itself?
So the viewers, if not today, then maybe tomorrow with a gap up. But the structure is very clear. We are seeing good participation from large cap heavyweights. So we are seeing a lot of stocks take the participation, especially in the banking names. Axis Bank is coming close to a new 52-week high or closer to an all-time high. ICICI Bank is making a turn. Reliance Industries, which the recent highs were around 2600, has started turning from the 2400 mark. Then the whole of even the power PSU names, Power Grid is nearing a new all-time high. So overall, the viewers, we are seeing more participation coming in from large caps. The last time when we were coming towards 20,000, we did not see a similar contribution coming in. So more positive, we could be actually getting into a place where large caps start outperforming the small caps for the extreme short term.
Okay, that's some of the key heavyweights which are chipping in today's rally, counting down to their all-time peak, 24 odd points away from that. SBI, of course, has also been a very strong show today. Anisha just flagged off Axis Bank, which is looking smart. And then, of course, HDFC Bank as well has been a contributor. So is the case with Kotak Bank as well. Nearly a 1% move is what you're seeing on that stock. But Kunal, you were talking about as to how IT also could be a contributor. What makes you so confident? And I'm purely talking about large cap IT names here, not mid cap IT, which have done well in any case.
I have always believed that prices bottom out first and the news flow or the data points, they always turn later. We've seen that happening for the markets in March 2023 lows, as well as what happened during the COVID time as well. Now, if you look at the price performance of the IT names, most of these IT stocks, and I'm talking of the large cap names like Infosys, which I think delivered second quarter of disappointment in terms of results. But the stock did not break the September 2022 lows, which was created for Infi. And I think same is the case with the likes of TCS, HCL Tech, Tech Mahindra, Wipro, where these stocks, they managed to somehow just trade above, or with a thin margin, they could manage to protect their previous year lows. And now these stocks have already confirmed a breakout of 10-month, 15-month highs, etc. from the large cap names. Now that's a classical sign that prices have started to bottom out first, and hopefully the news flow maybe over the next couple of months or say in the next 1 or 2 quarters should start to improve for these names. And I think that's the first critical sign which we typically watch out for, that if the prices bottom out first, they don't hit the previous lows, and in fact they make a fresh swing high, that's a clear case sign of a bottom or a major bottom being in place.
Major bottom or not, we'll wait by for a couple more quarters to get more clarity, because for now it continues to be half glass full, half glass empty for a lot of these IT counters. But what seems to be reacting to a full glass is the PSU stocks. Look at the run-up that we have seen. In fact, it's up almost 34% since March lows, and my colleague Somit has called out some interesting and baffling data. Let's go across to him to get the context right. Hi Somit.
Well, if you see from the March lows, BSE PSU index has run up nearly 34%. That is double than what the Nifty has run up in the same time period. It has gained around 17 odd percent. Now in the BSE PSU index, there are nearly 55 stocks. Of them, nearly 3 stocks have tripled in value. 9 stocks have more than doubled in value, while 15 of them have gained more than 50%, which means that nearly 27 of the stocks have at least given a return of more than 50% since March low till now. Now, there was only one stock that has given a negative return, and that is Gujarat Gas in the same time period. Now, stocks that have more than doubled in value include the likes of Mazgaon Dock, which has run up nearly 250%, which belongs to shipbuilding defense sector. Then there is IRFC, which has gained over 200%. Cochin Shipyard, which has gained close to 190 odd percent. Then there is Ircon, MMTC, RVNL, Midhani, REC, which have gained more than 130 to 150% since March low till now. Now, there are various reasons behind this run-up. In fact, there are sector-specific reasons, but the common reason around all the PSU stocks was the cheaper valuation and high dividend yield. And sector-specific, if you see in the power sector, there was power shortage, which led to higher tariffs and more new project announcements, which also led to order wins for these few of the companies. In defense, it was government's focus towards domestic production, which also led to more order flows coming in from the military and the navy side. And in railways, obviously, the rising capital expenditure of railways and more order announcement also boosted the railway stocks during that time period. After this run up, now let's look at how the valuations stand for these few PSU companies. Now, for Mazgaon Dock, the trailing 12-month valuation now stands at close to 40 times as against its historical average of 17 times. For IRFC, which is a financing NBFC, HDFC, its price to book stands at close to 2x, 2 times, while the historical average stood at close to 0.8 times. For Cochin Shipyard, it's 52 times. The only stock which has more than 100x P is BHEL, which is if you see the trailing 12-month P, that's close to 106x, while the historical average for this company stood at close to 44x. The valuations have increased now for this for most of this PSU basket, but they continue to gain in trade. So keep an eye out for the PSU basket going ahead.
That we will. In fact, let's discuss some of these names with Devang. Devang, we did discuss the railway pack, but just wanted to understand what is it that you're making of the defense names? What's really happening with the entire shipbuilding segment as well? All of these stocks have seen a flare up. You think there's still value on the table?
I think value, Aisha, is debatable. Probably value, the P re-rating as such, the price to earning re-rating has happened for most of these businesses. Why it has happened? I think the narrative was extremely explained well, that it was one, make in India, the defense equipments make in India, something called import substitution, something called efficiently run companies, plus execution capabilities. I think most of this have been showed in the last 3 or 4 quarters, that this story seems to be at least be now dependable on. But the major part is that the most of the stocks have run up ahead of times. Absolutely right when you say that most of these companies trade at 0.5, 0.7, 0.8 price to book. Most of these companies are now around 2, 2.5, and on P basis extremely expensive. But now it's the test is on the earnings front. If the earnings are sustainable, if the cash flows are sustainable, and whether the government has the same focus on capex as well as manufacturing, that needs to be seen. Ideally, it looks like yes, 10 lakh crores of capital expenditure on infrastructure, plus around 2.5 lakh crore on railways, plus on the defense side as well, and make in India import substitution, all playing out very well. I don't see extremely bad times for these companies, but one has to be cautious at this levels where stocks have tripled or quadrupled in the matter of 3, 4, 6 months time. So what that caution should be exercised a bit when you get into this type of businesses on stories rather than on earnings and cash flows.
Need to be watchful of the momentum that you're getting into. Thank you so much, Devang, for joining us today with your take on a lot of sectors. But just shifting focus and talking about some individual counters, Glenmark Pharma, that stock is up almost 5%. The management commentary suggested that they're eyeing 10 to 11% revenue growth in FY24. They're looking at focusing on free cash generation as well as debt reduction. So that's one stock that we're watching out for. We also spoke with the management of IRB Infrastructure. The toll collection was rather strong, almost 24% growth coming in on a year-on-year basis. And the management maintains that the outlook is also quite strong. They are expecting big order inflows ahead of elections, as well as the construction revenue is expected to jump up. It's off the highest point of the trading session, but nonetheless holds up in the green. Let's go across to our technical experts to get their closing trades and closing ideas as well. Nooresh, what's the closing trade?
So that would be Axis Bank getting close to that 1,000 mark, which has been tested multiple times. A classical flat multiple attempts breakout above 1,000 is possible here. So expecting a move towards 1,050, 1,100 in the short.
What about you?
From the auto bank, Hero MotoCorp is something which I would be bullish on at current levels, and I'm expecting that the stock could probably make a good comeback. It's on the verge of breaking past about the 50-day moving average, so that could lead to a decent momentum provided the stock confirms a breakout.
Okay, let's take a very quick break with those closing strategies. Still counting down to that all-time peak, just a little closer to that, 19,975, of course, on the Nifty spot. We'll take a break.